good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. With me is Nikunj Dalmia. For now, the market is trading in the red. In fact, given up quite a bit of gain from the highest point of the day. In fact, we're very close to the lows. The Nifty has given up almost 150 points from the top, and right now, just around that 24,500 mark. So definitely some sort of resistance building up around that 24,700 mark on the upside. Bank Nifty was outperforming for large part of the trading session. It's completely flattened out at the moment, as flat could be. 53,400 on that index. Broader markets have been faring much better throughout the last couple of weeks, and I think that's the texture today as well. The small cap index is holding on to 0.3% of a gain. Mid cap index was a bit more flatter, but yes, just around the flat line with a dip of almost 50 points coming in. But sectorally speaking, there are those pockets that one can watch out for. Real estate as a pack is doing quite well. So Raymond is up 11%. We saw that uptick on Godrej Properties on back of that Jeffries note. There are other names like Lodha, Macrotech Developers, etc. as well, which are doing well in the trading session. The financial market ancillaries, so Nippon Life AMC is up, Nuvama Wealth, a 361. All of these stocks are doing well in the trading session. And then you have the likes of Nykaa, which have been up almost 4% since the start of the day. On the losing side, CE Infosystem, after that massive 17% rally yesterday, is giving up. CEAT again a 10% rally yesterday, getting undone today. And then there are names like Kanza and Aerolax, Sapphire Foods, which are down and out. But overall, Honasa Consumer is also down 3.5%. But overall, it's very sideways. It's lacking momentum a bit. Reliance is under pressure. L&T is down. IT index is holding one end of the market because that was close to the record high, but not really much to talk about. But what is there to talk about is Budget 2025, and we're already getting you all the sneak peeks into what's really expected. And this is the latest exclusive from ET now. Sources tell us that the government may be looking at providing some tax relief to low-income groups in the upcoming budget. Prakash is joining us with the latest on this one. Hi Prakash, tell us what are the exclusive details that you're picking up?
An important development coming in, as we are learning from our sources that the government is likely to provide relief to the taxpayers in the forthcoming union budget. We are given to understand that the income tax relief is likely to be provided to the low-income group. In fact, the government is considering various options to boost domestic consumption, and therefore reduction in income tax for low salaried, low income group is one of them. In fact, we are given to understand that the relief is expected in the rupees 3 lakh to 7 lakh tax slab under new tax regime, and government may increase the exemption limit beyond rupees 3 lakh. A very significant development coming in. However, no significant changes are expected in the higher tax slabs. Sources are also saying that these discussions are at very earliest stage at this point of time, and a final decision would be made closer to the budget.
We all want taxes to go down, don't we? You need to do something to boost consumption, and something needs to be done for private sector capex to kick in. Those both factors are not really been on the right side of what we want to see from a market standpoint, and that is something which in a sense will continue to drag the market down. But I'll do a quick chart check with Kunal and Nuresh, and first let's get a sense of where we are headed in the short term. So starting with you, Nuresh, and it's been a day off for the bulls, nothing more, nothing less.
So we are trying to form a range. So the volatile day we saw last week, the range was say 24,300 to 24,850. So we are in this range. We've been seeing last three sessions, very tight ranges, 100, 150 pointer moves in the whole day. And one day you have a bank Nifty outperforming when you have a Nifty IT. So it looks like a consolidation after the recovery. But at the same time, the breadth continues to remain positive. We continue to see small upticks on the small cap and the mid cap indices. So for now, it looks like 24,300 to 24,800 is a band. If we get beyond this, we get a 300, 500 pointer move.
Kunal, what is your sense?
See, my belief is that the markets would consolidate further from current levels. I would probably expect the index to remain or continue to remain to this range. Now, the only change which has happened today is the change in premium for the index, for the Nifty. So from a 55, 65 point premium band, we've moved into that 85 to 95 point premium band for the index. So that generally indicates that it's more towards the more biased towards the long side, and the build-up is more on the positive side for the market. So which means that whenever the markets get out of this consolidation, we could be looking at the index touching the upper band of this consolidative range. So 25,000 is where I would look out for as a Nifty near-term target range. But again, that too would be just about a consolidative move for the index.
Sunil Subramaniam, good afternoon.
Hi, good afternoon.
For a bull like you also, I think now there are concerns which you need to really be cognizant of. Soap and shampoos are not selling. GDP is below 7%. Government capex is low and FIs are selling.
Well, you got to look at it as how much of it is short term and how much of it is sustainable in terms of those 4 pointers. I don't think any of them is a sustainable thing. So first of all, let's talk about soaps and shampoos, right? What's the forces at play here? There are two things, right? One is that while India's per capita GDP has expanded to 2,800 levels, you're seeing that the K-shape, which is true of the consumption also because of this, is that the rich are getting richer and the poor are remaining where they are, right? So it's a very polarized economic growth that's happening, whatever is happening, right? That's number one. Number two is the fact is that, so at the bottom of the pyramid, incomes are not growing at the same pace as the top. The second aspect is that inflation. For some reason, despite a good monsoon, we are having food prices being very high. It's a little bit of a puzzle. It's probably because the rain fell in the wrong places at the wrong time. Okay, so but still there is optimism that with the Kharif crop and the Rabi sowing being good, inflation would head down because at the bottom of the pyramid, inflation eats up. See, half of a bottom of the pyramid person's income goes on consumer staples, right? Those are very critical to him. So if your income there is stabilizing and inflation is going up, then your consumer surplus is narrowing, then you will postpone. You'll make that bar of soap stretch that much longer. You'll make that shampoo last that much longer. That's one. The second aspect is the two elections back to back. That is the big one, the parliamentary election, and this meant that the government took its eyes off the capital, which you also mentioned. But as a result of which, the government is a huge trickle-down effect in the economy. For every road or instruction that is built, there are people who lift the sand, people who lift the cement. So all of those trickle-down incomes, if they have come down, which means it's further pressure there, right? So that's the context to the consumption story. Now, you mentioned that private capital is not picking up. Now, it is the bottom of the pyramid consumption that has to pick up for capex to pick up because high and K-shaped recovery in the consumption means that less number of units are being sold of the big cars and the big houses. But the mass production of the other housing or the two-wheelers and the entry-level cars, that's not happening. But capacity utilization comes from volumes, not from value. So unless this bottom of the pyramid consumption gets solved, then the capacity utilization shoot up, private sector capex will only then step in. It's a natural process and you have to be patient to wait through it. So what are the steps there? First is inflation, hopefully with the monsoon effect and the Rabi effect should come down. Government should start spending because see, they're approaching the budget season. They have to make plans for next year. Now, if they're going to undershoot their capex estimates for this year, they can't go with a high number. So I expect a last-minute pump up through the last quarter of government spending, which will automatically have its trickle-down effect in the economy. So other thing is that we talk about the past data. See, the earnings already gave you a sense of the GDP coming through, right? The earnings season was so bad that the GDP number shouldn't have been a surprise. Now, what the RBI governor is saying, yes, he had to kind of roll back his 7.2% full year to 6.6. But that being said, he's still sticking from a 5.4 of last quarter to 6.8. So that's a 1.4% uptick in GDP that the governor expects, probably on the back of the government picking up the capex and the festival season numbers playing out. So I see no reason for pessimism that come January 10th onwards, when the earnings seasons come, because the market has got pessimistic with the GDP data and the earnings, they are also lowballing their estimates. I'm sure that the earnings season, as it pans out from Jan 10th onwards, will show a better than consensus numbers and hence an upward revision in things, which should be good for the market because the GDP number only will come by end February. The economic survey coming just before the budget might give a clue to that, right? Now I'll come to the final point. So government capex will continue to pick up speed. Private capex will still take time, right? But the final point about FIS selling. Now FIS selling for what reason? I think that first was a few months ago, the China stimulus and all that. Today we hear again about some China stimulus. But the more important thing is China is not the big thing. The big thing is the dollar strength And if the US economy is recovering on a risk-free basis, I make 4% on my debt, and I probably make 10-12% on a risk-free basis on the equity market in the US. So there's just a reversal to that. And finally, we are in that stage, Nikunj, of that period of the year when hedge fund managers have to book profits. So they started early October, November itself. You're seeing now from December, first 2 weeks, there has been a uptick in the FII. So bulk of the profit booking is done. That being said, I don't think that they are going to come back in a rush now. Most of them are probably planning their holidays. They're off on their Christmas, New Year vacations. Come back first week of January and then reallocate. So even then, they will wait for the earnings season to spell out what I'm saying, and then they will come back. And then the budget again will be a cause for euphoria, right? Because the government will again lay down reforms. They got confidence now with Haryana and Maharashtra turning over whatever pessimism there was about the government's continuance, right? So the confident government will continue on its path of reforms. And what you said just now somebody said about the fact they could give tax relief to boost consumption. I think all of those are positives in the budget season. So I expect that mid-January onwards, right through the budget season, the FIS will come back. And domestic flows, you would have seen the data today. They continue to be strong. SIP book continues to be at 25,000 crores. The only thing is domestic flows are largely tilted towards the mid and small cap, whereas the FIs are largely in the large and mid cap. So you're going to see a consolidating market. Fund managers have the firepower to buy at the lower end of the cap curve. FIs are naturally selling at the higher end. So this tussle of you versus me is a meeting point. So you will see some corrections in the large caps, and then they will, if there is a good large cap to buy, a fund manager may sell a good small cap which has run up a lot. So I think that we are in for a period of consolidation for another month. Just be patient. And as he said, as a bull, I see that this is the time to pick good quality over momentum, pick good quality over value as they've been doing, and good quality stocks, buy them on dips, sustain, but big allocations probably mid-January onwards is where I would expect to happen.
Well explained, Sunil, as far as the entire facets of investments is concerned there. So mid-January is when you need to start deploying in a better way, just ahead of the budget. That's the take coming in for now. Time now to head into a very short break. Don't go anywhere. When we come back, we'll discuss a lot more stocks and charts with Kunal, Naresh and Sunil. Welcome back. Well, for the markets, it's looking all right in the sense that we have been just fairly range bound. It's Raymond which is doing well in the trading session. JBM Auto is doing quite well. So let me take it across to Kunal to get a better understanding on these two charts. Raymond as well as JBM Auto, Kunal?
Yeah, Raymond is looking attractive. In fact, after today's price up move, this 10% plus kind of a move for Raymond, the stock is confirming a 2-month swing breakout. So previously the stock was taking a lot of resistance at the 1700, 1720 range as a resistance twice in the last 2 months. The stock managed to come back to this breakout point, but it failed to do it. Today, the stock has confirmed the breakout on the back of a significantly higher volume. So today's volume, for example, for Raymond is around 90-95 lakhs on the NSE, which is one of the highest volumes the stock has seen over the last many months. So that itself indicates that the price is now the prices are now getting back into a resurrective trend. This trend, I think, should take the stock back to that 2000 plus mark over the very near term. So looks attractive. JBM Auto, even that stock is confirming a breakout of a swing resistance above 1650 levels. So again, look out for targets in the range of at least 1800 to 1850 over the very near term.
Okay, so that's the target coming in on JBM Auto as well as the chart of Raymond looking good. Separately, Greaves Cotton is doing quite well in the trading session, and ditto can be said for Nippon Life AMC as well. Naresh, on the charts?
So both these names have broken out and have done really well. So for now, one should wait for a dip. If you look at, say, Greaves Cotton, the previous all-time high is closer to 255, 260. So that it's getting very close to those resistance levels. So should take a pause here. Would wait for a dip in this case, not buy at current levels.
Don't buy at current levels, wait for a bit of a correction. But, Sunil, I want your take regarding some of the metal names. But before that, let me play a soundbite of what Mr. Anil Agarwal of Vedanta Group had to say, because that demerger is impending. And that's something that the street is watching out. He talked about how demerger is going to be a value unlocking kind of scenario for the shareholders. So that's something to watch out for. And he did talk about the timeline of, I think, Q1 FY26, if I have it right, or Q1, FY26, when that will actually take place. Here out that that soundbite and then we'll discuss that further.
Each shareholder of Vedanta, one share, will be 6 shares. And all 6 companies are doing extremely well. We have seen some places that they all are doing extremely well, and I am the kind of business what we have in all these companies. The merger will take place, should happen in early first quarter of next year. And each companies are doing extremely well. Will have a very good dividend policy. Share price will do very well according to me. So I have no doubt that for me, I'm very conscious that my shareholder, I have a responsibility towards my shareholder, and I fulfill that responsibility.
Okay, so responsibility towards shareholders to unlock value. I will come to you, Sunil, in just a bit. But before that, let me take it across to Anurag. He's been standing by to talk to us about the non-life insurance data. Anurag, some of these non-life insurance companies, the likes of Star Health, etc., are coming under pressure right now. Is the data a little more tepid than what the trend has been so far?
So this is the first time official data that the GI Council has released with the exclusion of long-term premium. So from 1st of October, IRDA has changed the rule where insurers cannot show the long-term premium in the books. So the first caveat is that this cannot be completely compared with the last year November data. But data is showing that there is in a non-life company, there is some sort of pressure is there after the exclusion of long-term premium. So if you talk about the overall industry, after the long-term adjustment, the industry has shown a growth of 2.45% only, and the premium is in month of November. Standalone health insurance companies are showing a growth of 10%, and Star Health growth is of 7%. Niva Bupa is showing a growth of 14.5%. So first time after the listing of Niva Bupa, the data we are discussing Niva Bupa also, because we discuss majorly the listed companies data. The market leader New India after the adjustment is showing a good growth of 6%. And ICICI Lombard, there is a negative growth after the adjustment, same for the Go Digit also. And if we talk about the 8 months figure, then Lombard growth is around 12%. New India growth is 3%. Star Health growth is 14%. And Niva Bupa again showing a growth of 26%. So it's a 8-month figure with a caveat of long-term adjustment. I will also share the market share. So ICICI Lombard is gaining market share, reaching towards the 10% market share. Star Health is at a market share of 5%. Go Digit again 2.85%, and Niva Bupa is again gaining the market share. So after the new IRDA rules effective from the 1st of October, this is the first official data released by the GI Council, which has a caveat saying that companies has reported the long-term data, companies has excluded the long-term data, and which is showing an overall growth of 2.5% for non-life insurance industry.
Anurag, for clarifying that. So the data is not exactly like-to-like comparable, but that's the latest information that we have at this point of time. Sunil, let me come to you and talk about the insurance companies, because that was one sector that hadn't done well. There were these overhangs which were there, but on the other hand, you have the penetration which is low, and if you just go by plain simple logic, this is an area which is expected to expand further, and that fillip of GST was also expected to come in through. What's your sense on the insurance stocks at this point of time?
I agree with your thing that the penetration story means that for all the minor bottlenecks which will keep coming up, I don't know, in terms of taxation and all of that. But I think overall, it's a very good place to place your bets on, because if you recall my earlier answer, I was talking about the per capita income going up in the country to 2,800. And all of this will have a spillover on the savings pack entirely. And insurance is a big part. The awareness post-COVID has increased on health insurance and life insurance. So both of these, I expect that the penetration should rapidly move with the private sector taking the lead there. So I remain that the shorter term things, I would still say a buy on dips. I think sticking with good quality insurance companies will pay off in the medium term.
In the medium term, it's still a good, bet for at this point of time. Sunil, on that note, we'll let you go. Thanks so much for making time for us. Time for a quick break. But as we do that, hear out the conversation my colleague Anurag had with Mr. Anand Rathi on the sidelines of the Rising Rajasthan Summit.
If you see, normally the government would front-end capex, but this year because of these election process, they couldn't do it. Back end, you see, they have still spent more than half the money which they have provided in the budget. So I think, yes, the growth may not be as high as what we were talking, but still my belief is it will be close to 7%, 6.8 to 7%, because this and next quarter would be again very good, and the steady is absolutely on.
Okay.
Yeah.
But sir, do you have some concerns about the private capex, because that is not picking up? The data is showing that private capex is not picking up.
Actually, it may not be going as fast as people want it to be, but it is picking up. If you see the data, the private capex is coming. Also now what I believe is that when capacity utilization in any industry goes about 75-80%, that's where the capex starts coming.
But if you see the markets, FIIs are taking money continuously, and now retail investors are losing their money because of whatever they invested. So what should be the strategy for the retail investor, and how do you look after Indian stock market for next 6 months?
I would say last 3 years have been one of the phenomenal time. Okay, the markets have gone up, and the other worry, people think that whether profitability will go down. The EPS of Nifty companies, it's going up. This year we expected it to go by 12%, but it's likely to be 8-9% now because of this election phenomenon. Next year again, I expect that at least 12 to 14% growth will come in the profitability.
Welcome back. We are back above 24,600. So seen a bit of a recovery from the lows. Let's see which are the contributors which are actually driving this up move at this point of time. Shriram Finance is up 2.5%. Bajaj Twins are also doing okay in the trading session. And then IT clearly is one of those leaders today. That HSBC report is also providing some sort of support to that index, very close to the life high levels, if not at record highs. Wipro, HCL Tech, Infosys, these are some of the names to watch out for. Anand Tandon also joins us on the show right now. Anand, let's begin by discussing the IT pack itself. This morning, HSBC was talking about how there is an expectation of a recovery in terms of spends going forward. What's your take? Is this a sector which can provide that outperformance, or is it going to be that 8 to 15% kind of growth? And one is not sure whether they want to pay a multiple of 30 times for that. Anand, you're on mute. You'll have to.
Yeah, I was saying that, if they deliver 15% growth, it will be fantastic. I think most companies are still looking at single digit, maybe just about double digit kind of growth numbers. And there is nothing that I see on the horizon which predicts that there will be a sharp increase. The IT outlook in the US may have improved, but it is not necessarily for IT services business as such. There is no doubt, again, some amount of tightness in the market in terms of employability in IT. But but you have to keep in mind the statement like Mr. Sundar Pichai that says that 25% of the coding is now being done by the AI that they have developed. So, you will get to a stage where, and not very far in the future, where more and more of that stuff will be done by, at least the programming will be done by machines. And unless and until Indian IT starts focusing more on competence, more in terms of being able to create products and so on, I am rather skeptical on the ability of IT services to continue to scale. There are companies, of course, which are focused on certain products, especially, for example, car technology and so on, given the growth in EV. Some of them may continue to do some better for a while, and since they have a subscription-based revenue, it will probably continue and sustain. But plain vanilla IT services, I think the best is behind us.
What is leading the markets back? It is a combination of banks, it is a combination of Reliance, it's a combination of some few metal stocks. So Naresh, looking at the recovery, the fact that we are falling less, gaining more, when we are falling, there are buyers on decline, and then we are closing at the highest point of the day. So, I mean, we are closing off the day's low. What does that mean?
Rally, gaining some more strength for the next move towards 25,000, 25,200. And the breadth also tells you that given that the breadth is positive all through the day, we are not seeing small caps take a downtick with a 100-pointed downtick on the Nifty. So the structure is positive. It's indicating leadership could change, momentum could come back, and we'll see possibly till the time we hold 24,300, the bias would be to look at 25,200 as an upside target.
Quick commerce has been the big disruption, if you ask me, for the year 2024, and the latest being Amazon. In fact, they are likely to try the 10 to 15 minute kind of quick commerce deliveries, and that could be a potential game changer of sorts. These are just the headlines which are coming in right now, so we're going to evaluate them deeper. But Anand, I want your take. Amazon is likely to bring in a quick commerce version within 15-minute delivery.
I heard Amazon is getting into it. I didn't know about 15 minutes.
Yeah, I mean, that's what I mean. It's going to be, again, a revolution of sorts, because the SKUs that they have at hands, I don't know how they're going to do that, but that's at least what the first headline that I read is.
It'll be more on select, different app. It's like Amazon is already in groceries. We don't realize it, but Amazon is there in groceries. So it's not that they deliver everything. Amazon Fresh. So Amazon Fresh has been in groceries for a while.
Yeah.
It's just that they've not been able to scale it up. You want to doing something disruptive for the sake of being disruptive, or can you really have a sizable kind of a market share? Whatever said and done, 2023 e-commerce was introduced. It started becoming big. 2024 it occupied all the center stage. It excited the market. It killed the whole brand appeal which big box retailers had. But 2025, I think it would be about intense competition, derating of some of these stocks, because if so much of competition is coming in, delivery charges ain't going to go higher. That I can telling you. And there is so much of money which already has been raised by Zepto and Swiggy and by even Zomato, 8,500 crore a couple of days ago, that the institutional appetite or the appetite to buy into this entire quick commerce, jaldi delivery theme, I think is getting far from over. Anand, what is your view?
So one, you're right. I don't think you will get players which are coming from non-existing sources. But Amazon or a Flipkart, for example, has their own sources of investment. And if they decide to come in, whether or not they win over the longer term, you may find some of the existing players may continue to do very well, because after all, it is more a question of execution than just money availability. But in the near term, what will happen is that the competition will drive down margins and will make it more and more difficult for the profitability to happen, because at some stage you'll have to raise prices enough to be able to cover the costs. So in that kind of context, near term, I would expect to see that the existing companies also will be somewhat strained in terms of their performance. That doesn't mean that the stock market will necessarily see it as a negative, because over a longer time, I'm sure there will be a couple of leaders that will survive and the rest will decide to move out. But in the near term, I think financials will be a little strained. So I think, again, these stocks which have done exceedingly well may take a bit of a breather from here on. It's been actually very surprising to find that there is a need to buy tomatoes that have to be delivered in the next 30 seconds. But that is it may, it's a market which has exploded. It has one major problem, that it has its own a seed of its own destruction. If the takeaway from this is that the retailers, the small grocery shops, actually feel a lot more pain than they're already feeling, you may find that the government comes in and starts trying to regulate or find ways to slow that growth down. That could be a bit of a bummer.
I don't know 30 seconds or not, Anand, but you can ask somebody who spends time in the kitchen, and the importance or the criticality of getting that thing when you want it is really supreme. So they do solve a purpose. So that's something I think you need to take on board. Even if not 30 seconds, even if it comes in 10 minutes, it does solve a great purpose there. But that's the latest.
Sure.
Go ahead,
I'm sure
go ahead.
it does, but I'm just saying, for everything, I would imagine a lot of the groceries, etc., would be shopped. I mean, I can understand you have a guest coming in, you want to, get some refreshments out, and therefore you need to quickly buy stuff. But regular groceries, I mean, why there is a premium to be paid for short-term delivery is something that beats me. But, consumer behavior is what it is.
It is, and that's showing in the numbers at least for now. You know what? Let's also bring in a quick check as far as what's happening in the markets right now, because there's a bit of a recovery which is underway. IT, of course, is supporting the sentiment, I believe, and then real estate as a pack is also doing quite okay. Kunal, what do you make of this recovery? And we should try and bring up candlesticks as well of some of these. Is it meaningful? Should we pay any credence to it, or same range is what we are maintaining?
No, it's meaningful because it's led by PSU banking names. In fact, for the first time, yeah, SBI has hit a new high intraday basis, 868. Then you've seen PNB, Canara Bank making a new high for themselves. RBL Bank, of course, on the private sector banking side has come back towards a new intraday high. So it's been led by banking names, and that's why you've seen the Bank Nifty also from negative 40-50 points is up to almost 150-200 points. The IT stocks have done exceptionally well. So, and I strongly believe that even from current levels, many of these large cap IT names, Wipro, HCL Tech, etc., they would still look very attractive. In fact, now I think the chances are pretty much on the higher side that the likes of Infosys and TCS, which have been lagging behind by a decent margin from the other larger cap names, they would also start to play a catch up for themselves. So I believe that the market texture is getting improved for many of these sectors which have been performing very well, and within the sectors, the underperformers, even from the larger cap names.
Okay, point taken. That's the view coming in. PSU banking names are definitely perking up. IT is doing its bit. Real estate has been doing quite well for the trading session right now. But on the losing side, what's coming under pressure today? Let's check out some of those names as well. Bharti Airtel is down 1.5%. Reliance continues to be under 1300. L&T is down. Axis Bank and TCS. TCS is that laggard in the trading session, while the rest of the IT pack is doing okay. In fact, the likes of Persistent, etc., have hit a fresh life high. TCS is the one which is underperforming. Anand, wanted your take regarding Reliance as well. I know the next trigger that everyone is talking about, of course, is that demerger as and when it happens. But in the interim, is that going to be a bit of a worry with the kind of expansions that they're doing? There was that report that they're going to come up with the largest ever, debt raise in the last 2-3 years. What's the take on Reliance now?
Reliance has not had a problem in terms of restructuring the capital as and when they require it. A couple of years back, if you remember, there was also a scare that the debt was becoming unmanageable, and then they promptly went and raised a whole lot of equity. I think the number of triggers that Reliance has are so many that you will always find investors who will be willing to invest in the Reliance equity if they so desire. So I'm not particularly perturbed about the debt levels. The investments that they are making in retail, etc., haven't actually managed to generate the kind of enthusiasm that their size should. So at some stage, if that were to stand aside and the performance to improve, that will certainly help as well. Currently, of course, the main business of oil and gas is doing nothing much, and is not likely to do anything much also in the near term. So that's a bit of a drag on the earnings, but otherwise telecom is exceptional, given that it now contributes almost half or a little more than half perhaps of their profits. That's an area that will continue to grow as the prices to the consumer increase. So that alone will be able to drive the kind of growth that we are looking at in the recent past. Everything else, therefore, is an unknown upside. I would still think that Reliance at this stage looks reasonably priced.
And on what basis are you saying that, Anand? I'm just trying to understand the fundamental thought here. Is it based on P? Is it based on debt? Is it based on cash flows, existing businesses?
It's based on the sum of parts, Nikunj. If you look at each of the individual businesses, I mean, Reliance is difficult to value on a PE basis because the range of business ranges all the way from complete commodity to totally consumer business. So if you look at the sum of parts, I think there is some upside there still.
Nothing big in terms of an incremental move, but I want to go back to metals. We've been discussing metal stocks, this entire China halo factor there. Nuresh, is the trend still alive in metals?
So we are seeing selective moves. So something like Jindal Steel has making a strong comeback. You've seen NMDC give a breakout. So selectively, NMDC is one which looks interesting. Nalco is the other one which has continued to do well. It has not corrected much with the markets as such. So two names which really look well is NMDC and Nalco. The other names like JSW Steel, Tata Steel have not shown a very strong comeback, but they could recover. They've corrected quite a bit. But I would go with NMDC and Nalco on all dips.
Those are the top recommendations coming in from the metals pack. But what's the outlook looking like for 2025? That's the question we posed to the experts at BlackRock. Here are what they had to tell us.
If you just look at globally, the rate of inflation, one of the most surprising and the most wonderful things that have happened is the deceleration in inflation that has taken place across all DM and EM nations. And that, I think, has been a big driver of consumption across the world. You speak specifically around the US, and as I think about our year ahead forecast and outlook, which we're actually going to publish in the beginning of January, one of the ways in which we're thinking about the world is an outperformance of the US, or a continued outperformance, I should say, of the US with respect to where the rest of the world is. And of course, that's underpinned by some of the macro fundamentals around growth, around the labor market, around deceleration of inflation, and very importantly, around very strong consumption and therefore corporate earnings growth. Some very meaningful ways in which I think 2025 will be different from 2024 is, number one, we are no longer going to have conversations around, is the Fed going to start their cutting cycle? Is the ECB going to start their cutting cycle? We already have begun to see interest rates moving lower from the very restrictive territory that they were in. So that's number one and really important. With respect to the US in particular, as you correctly pointed out, 2023 as well as a part of 2024 was very much a story about just the tech dominance or tech plus dominance. What's really promising about 2025 is that we're already finding a rise of the rest as it pertains to earnings growth and as it pertains to performance, where we're seeing financials as an example, which is a sector that we certainly like in the US, actually outperforming tech based on very strong earnings growth and expectations of margin expansion continuing into 2025.
There's surge in some of the construction stocks, and government spending picks up, L&T would benefit. Government spending picks up, Dilip Buildcon would benefit, NCC would benefit, Ahluwalia would benefit. This really could be a new theme for next couple of, days and weeks to come as government spending will pick up. Hopefully things will start normalizing. Kunal, is there a trade in any of the construction stocks?
Yeah, so I think Ashoka Buildcon is something which is looking attractive from the space. The last 4 weeks I was looking at the charts. I think the rally started off from 225 or 230 levels, and now it's come back towards a life highs of 290 plus mark, and 4 consecutive weeks of very strong volume action backed by, of course, strength in prices for the stock. So looks attractive even at current levels. And with this range breakout, it's almost like a 60-pointer range breakout for the stock from 270.75 as a resistance and then 220 broadly as a support for the stock. We could be looking at the stock migrating to another 60-65 points on the upside from that 275 mark, which means closer to 335 could be a near-term target.
335 on Ashoka Buildcon, that's likely to happen. That's the take coming in from Kunal. But what are the BTST trades or STBT trades that our technical experts have? Naresh, you go first.
First would be a buy on LTM entry. The stock has given a fresh 52-week high, good momentum here. Stop loss at 65.50, target price of 66.50. Second is a buy on Muthoot Finance. The stock has continued to show momentum after yesterday's breakout. Would expect a dash towards a new all-time high. Stop loss at 2010, target price of 2008.
Kunal, what about your recommendations?
So I'll go with a buy on Jindal Steel from the entire metal pack. Looks attractive at current levels. So targets of 1030, stop loss could be kept at 970. And the second would be a buy on Piramal Enterprise, a classical breakout for the stock about 1200 levels. Continues to move up higher with strength. So look out for targets in the range of 1300, stop loss at 1235.
Okay, so those are the top recommendations coming in as a BTST trade from our technical experts. Well, SIAT is getting undone, and ditto can be said for VIP Industries, Root Mobile, LIC, Honasa. All of these stocks are down. Kanza and Nerolac is coming under pressure, so definitely need to watch out for some of these names. Even Trident, which was otherwise showing signs of strength on that 3,000 crore investment that they were making in Madhya Pradesh, is slightly under pressure right now, at least from the highs of the trading session. Wanted your take regarding this, Anand. The textile space, hasn't been much talked about, but is this something that you like? And I'm not talking about just retail, but the actual textile and spinning companies.
tracking it recently, so I can't comment. Spinning is not an area which is very it's very highly capital intensive, doesn't get much unless the government is giving a subsidy. So you are really looking at the garmenting space, which is of some interest. That's more a retail play, but as I said, I can't comment on a specific company. It's been a sector which I have ignored for a while.
You actually, a lot of investors have ignored this particular sector because, I mean, I guess it was the scale and size that wasn't much. But, you know, we were just discussing about the disruption in the quick commerce space and how Amazon is looking to come out with those 15-minute deliveries now. What exactly is the game plan? Let's try and understand with the company's executive, Amit Agarwal.
I would go back to say that if we were sitting here 10 years later, customers would still want more selection, faster speeds, and greater value. So what you're seeing is a very logical reaction. And right from the beginning, Amazon has been focusing on those three pillars. How do we add more selection? How do we make things more and more affordable for customers? How do we make things more and more faster and more reliable for our customers? So today, if you go and shop on Amazon, we have hundreds of millions of products. I think Prime members can get about 4 million products delivered to them next day. They can get 1 million distinct products delivered to them same day. They can get hundreds of thousands of products delivered to them in a few hours. They can get tens of thousands of products delivered to them in 30 minutes or an hour. So you already get those speeds on Amazon. You just don't realize, you're just always shopping for it. But we do recognize that to make it easier for customers to discover different levels of services, we do plan to launch our own 15-minute delivery offering starting with Bangalore later this year, so that customers could, in a very convenient way, look at all the products that they can get shipped instantly for them. So I would just stay tuned.
And when are you looking at expanding that service into other cities?
I would just say stay tuned. We'll start with Bangalore. We are super excited that we are loved as India's Apni Dukaan by customers. We serve daily essentials for customers across the corners of the country. And as I said, nearly 1 million items are shipped same day, distinct items. So, offering customers more and more selection at faster speed is something that we love doing, and so you should just stay tuned.
Well, that's the exclusive word coming in from the management at Amazon India on their foray into quick commerce, a space that is increasingly becoming more and more popular each day. But on that note, let's take a look at what the markets have panned out to do in today's trade. Very surprisingly, last couple of minutes of trade on Nifty has managed to tilt over to the green. Otherwise, it's been in the red the entire day and looking comfortably above the 24,600 mark for now. So Nifty looking rather good. Sensex is following suit, just holding on to the green by the skin of its teeth, but nonetheless above 81,500 is where the Sensex is also right now. Advance decline just perfectly evenly distributed between the advances and the declines. It's absolutely in the middle. So that's what has been spooking the street a little bit out today. If you take a look at the broader markets, good show of strength coming in from the broader markets today. You had Nifty mid cap that was roughly up 0.3%. Nifty small cap, however, has continued to do well even amid when the beaten down market, when the market was in the red today. Small cap also up 0.3%. So very good move coming from that front. On the Nifty front, you have Shriram Finance, Bajaj Finserv, HCL Tech, Wipro, Infosys, SBI. Of course, all of those IT counters were in focus on the back of that HSBC note that we saw coming early in the morning. But well, yes, IT is a sector that has done phenomenally well today. So IT was in focus. These are the stocks that have gained, that have led some support to the Nifty today. However, what did not do well on the Nifty today was Adani Ports, Bharti Airtel, Adani Enterprises, HDFC Life. All of these stocks were down and out. Sectorally, if you take a look at some winners and losers today, Nifty Realty was your big winner in trade, the top sectoral gainer on the back of that move that we saw coming in Raymond. 11% uptick coming over there. You also had a positive note on Godrej Properties by Jefferies today. So that stock was also a buzz, and both of these stocks have led to some good moves coming in for the realty space. Of course, that was followed by IT, PSU Bank, Nifty Bank, Metal, FMCG. All of these sectors have rather managed to turn towards the green in the last half an hour or so of trade, because they have been tanking away over the course of the day. Nonetheless, you have Nifty, Media, Energy and Pharma that continue to still languish in the red. If you take a look at the IT index, then you had LTI, Emphasis, Persistent, HCL Tech, Wipro, Infosys. All of these stocks have done well. However, when you shift focus to the energy pack, then you have Tata Power, Adani Power, ONGC, Reliance, Adani Green. All of these stocks have not done pretty well in today's trade, and on the back of that, the energy index was down and out. If you take a look at some individual stocks to talk about, IGL was in focus. The board has approved a 1:1 bonus ratio today. Gujarat Gas also in focus. They've undertaken a price hike in the Mobi region. Insurers and non-insurers both were in focus on the back of that November operational data coming in. So good show coming in from HDFC Life, Max Life, ICICI Prudential, rather weak coming in from LIC. NBCC was in focus on the back of that order win that they had today, 432 crore rupee order back from the University of Orissa. So that was looking good today. Glenmark Pharma, that stock was doing pretty well today, roughly 2% gain coming in on that counter because the first clinical data of blood cancer has shown that drug has shown very positive signs. Glenmark Pharma right now also up 2%. So very good moves coming in over there. Syngene then, block deal happened in the morning, 2% equity has changed hands. The assumed seller is Biocon. We'll know more details after market close in the evening today. On the back of brokerages, you had Godrej Properties. Swiggy, of course, on the back of that CLSA note with 708 rupee price target coming in. Swiggy was in focus. So, well, yes, this is how we're wrapping up for the day. Lots of pockets of value to watch out for. Some did well, some did not do well. But at the end of the day, we have managed to end in the green just nominally, but comfortably above that 24,600 mark. That's how we are shutting shop for today.